So everyone, thank you for coming to our webinar today. My name's Alex Wilson, and we have Kyle Dovigi with us. We have both been investing in Calgary since 2019. Hey, Tom. Oh, Tom raised his hand. If you have any questions, you can ask them in the Q&A box, and we'll address those at the end of the webinar. So we've been investing in Calgary since 2019, and we still see a tremendous opportunity and growth in that market, and we're going to get into why we see that today. So we have a vested interest in the market. We're putting our money there as well, and we'll tell you why we think you should be too. And if we just, I don't talk about that later. My name's Alex Wilson. Broker owner of Remax Wealth Builders Real Estate, been selling real estate in Toronto for over 12 years. #1 Remax agent in Ontario for transactions in 2019. I was actually #3 in Canada last year. #14 Remax agent in Canada individually in 2022. New stats came out today. That's gone to #10 in Canada and #15 in the world.
Nice, congrats.
Thank you. Inducted in the Remax Hall of Fame, awarded the Remax Lifetime Achievement Award of 35, awarded Remax Circle Legends Award. None of that matters to you. That's why I don't really keep this slide that updated. But what matters is the investment success. So turning a deposit of $39,300 into a $14 million portfolio, which that has even grown now as well. We recently bought another house in Toronto, but 14 condos, High Park triplex, an apartment building in Hamilton. That's all our investment properties personally. And did you end up putting a portfolio together for yours on the webinar?
Okay, afterwards.
Okay, I'll do it after. Okay. So what I like to show everyone, to get everyone in the investing mindset, is I give a breakdown of my portfolio, but I don't look at my portfolio and what it's worth today. I do look at that, but I'm not as concerned. What I look at is what's my portfolio going to be worth in 10, 20, 30 years. And 30 years really excites me. And the reason 30 years really excites me is that in 30 years, all my properties will be paid off. And that's because the tenants of my property are paying down the mortgage over the next 30 years. And my mortgages are amortized over 30 years. So when you have an investment property, you have to put 20% down when you close on the property. And that allows you to get a 30-year amortization mortgage. So that means you have 30 years to pay it off versus traditionally the 25. So in 30 years, all my properties will be paid off, and I will then have a portfolio that's worth $36 million. And that's at a conservative 3% compounded annual growth rate. And because we hear a lot about inflation. Oh, there's Kyle. Hey, doing, Kyle? Kyle, you jump in.
Perfect, thank you. So yeah, my name is Kyle Dovigi. I'm licensed in both Ontario as a real estate broker and Alberta as real estate associate. So dual licensed in the different provinces. Like Alex said, I've been investing since 2012. Really got in started with Alex. We invested in the same project, and Alex and I go way back. We know each other from high school, actually. So have been, really good friends since then, went to university together and everything like that. And he really got me started investing in real estate. It was a passion I had through university, but he said, Kyle, this is a great project. You need to start doing it. And I'm really glad that I listened to that. And it's been over 10 years now since I've been investing. Now I've got 6 properties myself. So built a nice little investment portfolio. And virtually all of that was done while I was working a 9-to-5 career. So it goes to show you that really anyone can do it. And just need to take a few steps and add the secret, time. So my previous career was actually in the lottery. I used to manage Lotto 649 and Lotto Max. So I was the draws manager doing the ball draws. And during that time, learned that almost a third of Canadians were depending on winning the lottery in order to fund their retirement. Those are depressing stats. So eventually the opportunity came up where Alex actually brought me over to Remax Wealth Builders to start my real estate career a little over 3 years ago now. And, I'm really glad I did, because now I'm helping people build real estate portfolios to build wealth and not gamble on their future. And I've helped over 100 people this year alone invest in Calgary real estate. And similar to Alex, it turned a very small deposit into a multi-million-dollar real estate portfolio.
And to give you guys some idea of our backgrounds, we're using big numbers here, but we're both from Sudbury. I'm the son of a city worker and my dad was a carman on the railroad. Kyle's father was a school teacher and his mother was a nurse. I say this because truly anyone can do this. And, we witnessed our families in their older ages, my family doesn't have real estate portfolios. Kyle, your family doesn't have real estate portfolios. They rely on pension funds and relying on the decisions of other people for their livelihood, like to be taken care of after the fact, right? But what if one of those companies went under? Now, OMERS and Ontario Teachers Pension Plan, you're okay. But like, let's say you're at a private corporation that went under. This is where we get into pension funds. And, for example, Sears, when Sears went under, do you think those pensions are protected? No. If you look today, and you go to England, now this will happen. I go down rabbit holes and Cal will bring me back. But this is today, pension funds in England are in panic mode. They're currently being bailed out by the government right now because they're in a cash crunch. So if the pension fund isn't managed properly or the company goes under, your retirement is gone. So you can easily build your own pension fund using real estate and making really simple small steps. It's tried and true. We're investing in roofs overheads. That's what we're doing. And you'll hear me use that line again later.
Exactly. So Alex, next slide then. There's a quick look at my real estate portfolio. So like I said, I've got 6 properties. First one I bought was a 1-bedroom condo in Queen West in Toronto. I've got a freehold property as well, a house in Toronto. And then I started adding properties, kind of one every year. Riverside Square, which is on Queen East, Line 5 at Yonge and Eglinton, Galleria. Brand new release just came out. 5% down until closing. Definitely recommend checking it out. I've got information if you want to contact me, but that's at Dufferin and DuPont. And then more recently, I've started investing in Calgary because that's where I think the appreciation is going to be. So it wasn't quite in 2019. That's when Alex started. I needed a little bit more convincing to be able to put my money down. So I started in 2020 and I'm looking to pick up my next one. Calgary is definitely going to be where my next property is.
Oh, yeah.
And hands down. So even at humble 3% appreciation, and that's what I always tell people when they say, what do I expect? What kind of return can I get? I'm like, I don't have a crystal ball. I have absolutely no idea what return you're going to get, but I base my numbers just on 3%. With that, I'm happy. And you can see that grow, over 30 years, I'm going to have over $10 million portfolio and that will be paid off, but I'll also be getting the cash flow from the paid off properties as well. So I don't even have to touch the $10 million. I'll have revenue coming in every single month from those properties too.
Yeah, that's you don't care what the value is today. You don't, because someone's going to be living there and covering your costs. That's the key in taking the long-term horizon. And that's why we start with that and get people in the mindset. Don't think about today, think about the long term. When we get questions on the phone, and Kyle knows how annoyed I get when people ask about assignments. When we get questions on the phone, people go like, oh, like how much is going to be worth when it closes? I don't know. But it doesn't matter, because if you follow cash flow based principles, then you're going to be fine. And people are coming and people are looking at Alberta as the next frontier for investment. I've seen it since 2019. And there is going to be some stats in here that blow your minds. So just to give an idea, in 2022, we've helped over 300 people from across Canada invest in Calgary and sold over 150 million pre-construction units. And we personally invested in 10 Calgary pre-constructions units. That's our entire team of myself, Kyle, Ramin, Nick, and Nish on our team. Everyone on our team has invested in Calgary, and our families. So we brought our families along with us too. So I'd say getting your family involved is more of a testament to actually getting yourself involved, because if my family gets screwed over, I'm much more stressed than a bad investment decision on my end, for me personally. So going to the slide and talking about inflation, this is where I took my portfolio and I'm like, hey, well, it's worth $36 million. But what's that in today's market value? Because we hear about inflation in the news. Well, that's worth $21 million in today's market value. And what can you do with $21 million? Well, if I looked at a conservative 5% rate of return on that $21 million, it would generate over $1 million of annual income. Now I want to reinvest 2% of that to protect against inflation. That means I could live off of $625,000 per year while maintaining the purchasing power of my portfolio, which is really something.
I don't know about everyone else on the call, but I could definitely manage off of that.
Yeah. Oh, yeah. Exactly. And again, like you're looking at these are your later years in life when your major expenses are already done. Your kids are off. Your homes are paid off. That kind of thing. So you don't even need that much. Now, this is what I do every day. So you don't need to achieve that, right? Like as Kyle said, like, yeah, like that's a big number. But if you just take little bite size, it's all about taking little bite size. You know, if you get a $1 million portfolio today, which isn't a lot, that's like 3 Calgary condos, 2 Calgary condos. That will, in 30 years, give you a payout of $70,000 per year. $2 million, that'll give you $140,000 per year. And that's today's purchasing power, And then you keep on going up. $10 million portfolio in 30 years, $701,000. You know, give you an idea. So you just take those little bites, little bites. You know, if you asked me in 2012 if I thought I'd have what I had today, I wasn't in my mindset. No, I don't think, Kyle, when you started in 2012, we bought in the same building to start off with 2012. You know, if you said, would you think you'd have a $10 million portfolio in 30 years? Would you think that?
No, like those numbers are mind blowing.
Yeah.
When you're coming out of that non-investing mindset that our families historically had.
Yeah. So this is achievable for anyone. So getting everyone in that, and that's where you even hear about people relying on their homes, selling their homes in retirement. But if you utilize your home today as an investment tool, you can use your home to create a pension fund, keep your home in retirement, leverage existing equity now to fund your retirement. So what I mean by that is that if you had a home equity line of credit on your house, you could use funds there and invest those funds back. There's only one way to get money out of your house and reinvest it right now, and that's if you sold your house. But if you borrowed money against the house and then reinvested it now, then you'd have 2 properties going up in value instead of 1. So in 30 years, you wouldn't be relying on selling your house. You can still have your house. You can still live in your house. No one's going to force you to sell your house. And you have multiple other real estate properties, because then you could refinance the other one that you bought and then buy more, refinance the next one you bought and buy more, and can keep that cycle going. And each $350,000 condo represents $24,000 of annual income in your retirement years. So these are mind-blowing things, and we are recording this, so we'll send this all out to you later.
Yeah, and that refinancing piece, Alex, whenever I talk to people, many people don't understand how it works. So if anyone on the webinar wants more information, definitely reach out. But it's the single best tool to grow your real estate portfolio.
Oh, yeah, 100%. We both utilize it. Okay, so why Calgary? So now that we got you in the investment mindset, why Calgary? So number 1 most livable city in North America. These are things that I looked at in 2019 when I started investing. 4th most livable city in the world, top 5 on the Economist Intelligent Units Global Livability Index, located in the foothills of the Canadian Rockies, loads of green space, lowest cost of living, 2nd lowest cost of living in Canada, and 9th lowest in North America. That one there, out of other than the most livable aspect, that one there, I really want you to hone in on that, because that is a massive factor that I'm going to bring up as we continue to go along. And Calgary, is a beautiful natural space. So it's the sunniest city in Canada. So I got a lot of flack sometimes. I get angry emails going, the weather in Calgary sucks. So I challenged them. I'm like, you know what? Did you know that the weather is worse in Montreal in the winter than it is in Calgary? So roughly the temperatures of Montreal and Calgary are the same in the winter, except Montreal gets a ton of snow and is cloudy all winter, whereas Calgary's sunny. Calgary's sunny. So it may be cold, but Calgary and Montreal, similar temperatures. But again, and also a dry cold versus the humid, wet cold of Montreal and tons of snow coming down and everything like that. You don't get that in Calgary. You get beautiful sunshine down there. Most extensive outdoor pathway, and ranked the second for the healthiest lifestyle in major cities in Canada. So you're sounds like a great place to live. And get the Rockies right to your doorstep. 5 world-class ski resorts within 2 hours, over 200 hiking trails in Banff National Park, 1.5-hour drive to Banff. And that's a real 1.5-hour drive. It's not like 1.5 or 2 hours to Muskoka, but you got to leave at 2 in the morning to do that. They don't have the same traffic congestion that we have. So you're literally in this world-renowned space that's at your doorstep. So why are Alex and Kyle investing in Calgary? So when we look at population growth, and this is where we talk about roofs, overheads, right? So you want to be, since you're investing in real estate, you're investing in a roof and over someone's head. So you want to make sure that the population is growing in that area. So in Calgary, 2018 to 2019, 46,000 people, 2019 to 2020, 44,000 people. Getting a pandemic year still grew by 34,000 people. Whereas during the pandemic, the population in Toronto shrunk. You know, the metropolitan area of Calgary grew. And believe it or not, Alberta saw the highest net migration between the provinces during the pandemic. Alberta grew the most during the pandemic out of all the provinces. And you're going to see more stats as we talk along, where you're going to see, wow, Alberta's charging ahead with supercharged growth. Calgary also has the highest millionaires per capita of major Canadian cities, and Calgary represented the highest wages and salaries per employee in the country at 66,000 in 2018. So they have population growth. They have the money. There's wealthy people that live there. They pay the highest wages. These are things that are important to you when you're looking at investing. And this is where it starts getting exciting. So we look at the Alberta population set to increase by 48% and will be larger than BC by 2043. So the swing of people from Alberta to BC. So Alberta has 600,000 less people than BC currently. And in 20 years, it's going to have 400,000 more. And versus Ontario is going to grow by 24%. So it's going to grow at double the rate of Ontario over the next 2 decades. Again, that's where the people are going. We've talked, and if you read in the news, you talk about the future immigration boom. I shouldn't say future immigration. It's already happening right now. So Canada has has set the highest ever goals for new Canadians to come to Canada. And where are these people going to be going? There's 3 provinces they're going to go. They're going to be going to Ontario, British Columbia, and Alberta. Alberta, and specifically Calgary, the population of Calgary is currently 1.6 million people. By 2043, it's going to grow by another million people. That's 62.5% growth over the next 2 decades. All these people are going to need a place to live.
And Calgary isn't that big either. Like it's just a city. It's not like the GTA that's sprawling for hundreds of kilometers too. So to pack an extra million people into a city that size, it's going to have significant impact to the housing there.
Oh, massive, massive. And tell you right now, they have a less than 1% vacancy rate in Calgary. And there's lots of new companies that are opening up in Calgary, even in today's challenging economic environment. We're going to talk more about that. So also, we talk about population growth. What about money? Well, Calgary is the 4th largest city in Canada. It's also the fourth largest economy in Canada, behind the big 3, Toronto, Montreal, and Vancouver. Calgary comes in number 4. The economic output of Calgary is larger than the economic output of Saskatchewan or Manitoba. So it's larger than provinces. So they have the jobs. And another factor too is Calgary is a true international airport, in that during the pandemic, there was only 4 international airports in Canada that were operating: Toronto, Montreal, Vancouver, and Calgary. What that means is that I could fly direct from another country and land in Calgary, Vancouver, Montreal, or Toronto. Otherwise, I'd have to connect through. So when people are looking at locating their head offices, you want to be in a city that you can get people to directly. So you may be going like, well, if Calgary sounds so great, well, why hasn't everyone been buying there? Well, buy low and sell high. So what happened in Calgary was that you had a big building boom in around 2014. And that was with record oil prices over $100 per barrel oil. Oil prices started to go down and saw a big crash in 2017. Because of that, you had a bunch of layoffs that were happening, and you saw new condo prices drop 21% since that time. Here's the thing, the layoffs already happened. So all the people were laid off in oil and gas and need to be laid off. So we're taking a buy low approach, or that's what we did in 2019. You know, we've seen the presentation we were in 2019, you were buying low, you're buying right before the recovery was going to start to happen. Now we're in the recovery phase, and that's going to continue going up and up and up. But people were so sour on Calgary because prices went down. When we were having these calls in 2019, 2020, and heck, even 2021, people would be like, well, how much did prices go up the year before? And like, they didn't. And like, what do you mean they didn't? Because people were so used to Toronto going up, 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 up. And I said, no, this is why you want to buy here. You're buying low. You're buying at the bottom. You're buying at the bottom. You're about to see the boom times that are going to be coming into Calgary and Alberta. And that's the exciting thing. So you're still buying at a low period as we're starting to see growth and prices increase in Calgary. And why are they doing that? Well, we talked about the population growth. And we're going to be adding on about the diversification of the economy after that. But something that's crazy is that when we started doing these presentations in 2019, it wasn't based on oil and gas. So I always talked about how Calgary is diversifying from oil and gas. But one massive factor is the Trans Mountain Pipeline. So the Trans Mountain Pipeline, the issue with Alberta is that it's landlocked. And you can't easily get the oil out of Alberta to other countries, to export up to other countries. And that's why you hear so much flack about pipelines. So pipelines are the only way to get the other than putting on transport trucks or railway tracks. Pipelines are the most efficient way to get oil and gas out of Alberta to ports to export them to other markets. So you do a pipeline going to the US, but the issue is we don't have a lot of pipelines that go out that allow us to export the oil to international markets. When Trans Mountain Pipeline completes, which it will, it's under construction right now, and as Canadians, we all own it, and it's been earmarked a strategic Canadian resource by the federal government, that will allow us to increase our international exports of oil to markets other than the US. And that's where we're going to see massive, no, I shouldn't say massive growth, but that by allowing us to diversify the Canadian oil, it'll allow us to increase the price of just Canadian oil. So at times when the oil market's poor, the Canadian market is even worse because we basically only ship our oil to the US. So this allows us to diversify our oil resources. And on top of that, what's going on in the world right now is if you look at the top producers of oil in the world, or the top reserves of oil in the world, the majority of them are run by dictatorships or authoritarian regimes, which are politically sensitive. And when things happen, like they're happening right now, things happen to the supply of oil and energy to other countries, which is happening in Europe right now. You don't want that. Companies don't want that. Countries don't want that. You want to know that you have safe, secure supplies of energy. That's what Canada has to offer. Not only just energy, but it's commodities in general, because we're a commodity-based country. So what's going on in the world, the current political environment and partial destabilization does work in Canada's favor in that we have safe, secure resources that we can provide to other countries around the world. And you're going to see the value of our resources continue to grow in the years to come, because that's what we have to offer. But the great thing is that Alberta has diversified away from oil and gas. So they get the oil and gas money, and we're going to talk about the surpluses that they've run in Alberta. So the infrastructure and everything for oil is there, but since 2017, they've diversified away from that. And that's where Calgary is in the forefront of new technology jobs that are coming to the city. So the Calgary is outpaced from a tech workforce standpoint, everyone else in North America. So what happened in 2017? So you had all these layoffs. Now, Calgary has the highest proportion of STEM graduates in major Canadian cities. The reason for that is oil and gas, the development of the oil sands, require degrees in science, technology, engineering, and mathematics. These are also the same degrees that you need in the technology industry. On top of that, you had this overbuild happen from 2014 to 2017 when gas prices are record highs. So what happened at that point is that you had companies laying massive people off. So you had a reduction in the demand for office space. Just at the same point, you had a bunch of office space coming on. So you had vacancy rates hovering near 30% in Calgary. What does that mean? You also have cheap office space available. And what is good for cheap office space? Well, startup companies that are sensitive to capital. So Calgary is home to 435 technology companies, 3/4 of these startups. There are more than 2,000 open tech jobs in the city, and a record 44,500 Calgarians are working in tech right now. To give you an idea how cheap this office space is, office space in Calgary leases for $17.50 per square foot. Compared to Edmonton, Edmonton's 23% more. Toronto is over double, over 102% more. And Vancouver is nearly triple at 155% more. So if I'm a company and I'm looking to start a startup or that kind of thing, or if I'm a company that's looking to open a head office and I'm cost sensitive, Calgary has the lowest cost for office space. And now these startups are starting to hit unicorn status. So what does unicorn status mean? Unicorn status means they had $1 billion valuation. So we had Neo Financial, their headcount has swelled to 650 people, and the company is looking to hire another 100 positions in Calgary. Amazon. So Amazon is opening a new cloud computing server hub, second in Canada. The other one's in Montreal, a $4.3 billion investment, 900 jobs. That's happening. We have a project. Kyle will talk more at the end of this part, not the end of this part, but at the end of the presentation when we get into the actual product that we have. Is Arthur Condos, just 10-minute drive north of this. Amazon is going to have its new cloud computing hub for Western Canada. TELUS hiring 8,500 people in Alberta, part of a $17 billion investment in operations and network in Alberta. Head office is in Calgary. WestJet relocating all of its 787 Dreamers to Calgary. 1,000 direct jobs happening there. Calgary is its only connecting hub within its global network, making Calgary its only connecting hub. These are massive, massive things.
These are big companies, you know, it's not just small and medium-sized businesses. These are international corporations that are either setting up brand new operations or expanding their existing ones. But then you even do have smaller companies like de Havilland Aircraft. They're actually building a massive new aircraft manufacturing complex that's just going to be east of Calgary. So anyone that invested in Lockwood Condos, Aberdeen Townhomes, East Hills Crossing, this is huge news for all of you. Because yeah, this is huge. Like Chestermere on East Calgary, it just has about 22,000 people. This is 1,500 direct jobs, going to be 10 minutes away from that. Like, it's going to have a huge implications to the real estate and just general city of Chestermere and East Calgary too. But they're just not setting up operations. They're moving their operations from Toronto to Calgary. And looking to have those 1,500 jobs there, massive 1,500 acres of land. It's going to be a huge sprawling complex that's going in there. Again, just 10 minutes east of Calgary.
And I want to add, people may not know the name of this company. So that, well, what is this company? You want to know what they make? They make the planes that drop. They make the water bombers. They make they make other airplanes too, but they make water bombers. Okay. So do you think water bombers are needed today? Water
Global
bombers,
warming.
we talk about record forest fires in BC, in California, around the world. This is the company that makes all the water bombers for the world. And they're going to be in Calgary. So they're not going anywhere anytime soon. Calgary, Kyle, I'll let you keep on going on all these.
Yeah, and this is doubling down really on WestJet's investment too, because they were partnering with the province to add new education courses, university requirements for pilots, everything like that. And de Havilland is going to have training facilities there too. Like it's going to be a full integrated complex there. So that's huge, huge news.
And big money paying jobs. And here's the thing too, is and I'm very happy, I'm very excited about de Havilland. Relocating from Toronto to Calgary. These are specialized jobs. You know what that means? They need houses in Calgary. The people will leave Toronto and they will move to Calgary. All those people, well, I don't know how many are actually relocating, but I've been involved in relocations before I started selling real estate. Like there's a massive amount of people when they have one of these corporations relocate. They will need a lot of houses and rentals, and they're going to want to be close to the facility. And Chestermere, which is an executive community just east of Calgary, I call it the Oakville of Calgary, is the closest community to this new facility. The new facility is in the middle of nowhere. So Chestermere is the closest community, just literally on the outskirts. For the people on this call, if they invested in East Hills, East Hills is basically your farthest east community in Calgary, and then you go into Chestermere to give people an idea where it's a map. And then you have Chestermere, which is this executive lakefront community. So, Kyle, but that's not just all of them. Like Infosys, I'll let you, Kyle, talk about this and talk about these companies as well that are coming here.
And Infosys had already announced their next generation digital services and consulting company. They already opened a digital center in downtown Calgary, and they were going to have 500 jobs. They just announced that they're doubling that now. So already expanding the footprint that they have and looking to have 8,000 people across Canada by 2024. So rapidly growing company.
Yeah, and this is an Indian-based consulting firm, one of the biggest based IT consulting firms in the world.
And Emphasis, their next generation digital technology services as well. So common theme, next generation and technology, right? Opening up in Calgary. Going to have a new delivery center downtown Calgary, 1,000 jobs in over 2 years. Then SideTrade, this was brand new, just announced a couple of days ago. Artificial intelligence order to cash platform, which is essentially invoicing, getting the money from your order to your actual bank account. Opening up brand new headquarters in downtown Calgary with over 100 jobs there. But not just that, big names again, TD Bank. They're opening a Western Canadian wealth hub in downtown Calgary. This is where they're going to be training their financial planners on how to actually, do financial planning. And they chose Calgary because it's got the highest population of post-secondary education people there. So again, comes back to that, STEM graduates, hugely educated workforce, just isn't needed for oil and gas and technology in the financial sector as well, critically important. RBC. This is a little bit older, but they opened up a new Calgary Innovation Hub. They're adding 300 tech jobs and really looking to add that technology ecosystem in Calgary. And then Ernst & Young, sure you've heard of them, setting up a finance hub in Calgary with over 200 jobs. And you're seeing this time and time again with these big companies. They're setting up these financial hubs, these networks in Calgary. Calgary is really going to become their Western Canadian front. And you're really covering all of Western Canada.
And do you notice that none of these companies have anything to do with oil and gas? None of them.
Exactly. IBM, another one. They already opened up a new innovation hub. This was literally down the block from Gallery condos that sold out earlier this year with another 250 jobs. But it's these sorts of investments in downtown Calgary and the surrounding areas, it's not just one-time investment because they continue to grow and expand on the existing footprints that they have. So might be small numbers now, but if you look out 5-10 years, it's likely going to be much, much greater than this. And when you have so many companies doing that, Big companies, but also small and medium sized. We haven't covered a lot of those because you're not going to recognize the names. They don't make headlines, but those small and medium sized companies are the backbones of many economies, and they probably contribute more to the local economies because the money's staying more often in the cities themselves and churning a bit more than some of these big multinational companies. So huge overall benefit to the city of Calgary. So
Yeah.
Alex, why are all of these companies moving to Calgary?
Do you want me to tackle it or you want to go for
Yeah,
it?
go for it.
Okay, me. Okay, so we talk about all this, and the thing is, it's already happened before. And what I mean already happened before, if I go to the US and look at the US markets, you're seeing a migration of companies away from California. Now, why are companies leaving California and moving to places like Texas and Florida? Well, they're fleeing high taxes. Well, Alberta has the lowest corporate tax rate in Canada. There's no land transfer tax or development charges. So any of our established real estate investors would know about those in Toronto that are on the call. We don't have any of those extra costs on closing. It's literally just paying the legal fees. And there's no provincial sales tax here. This is the lowest tax jurisdiction in Canada, lowest tax province. Number two, expensive housing. Why are companies moving away from California? Well, you got six-figure employees sleeping in couches in San Francisco because they can't afford anywhere else to live. Expensive housing. Calgary, lowest cost of living, second lowest cost of living out of all major Canadian cities, and ninth lowest in North America. So you have very, very affordable housing in Calgary and high-paying jobs, and government regulations. And this is where it's going to get really exciting. And when I talk about it more slides and you connect the dots. So when COVID hit, immediately the government did two things. They cut corporate taxes, the Alberta government. They also set up a $175 million commitment to Alberta Enterprise Corp for innovation. And that's where you're starting to see some of the stuff happen today with their these new companies that are moving into Calgary. Alberta's been actively courting these companies to get them like, hey, don't forget about Toronto and Calgary. Forget about Toronto and Vancouver. Check out Calgary. They're making the investments to attract these companies to come in here. And there's a reason why is Alberta has a lot of money. And also another fact, there's no rent control out there. That doesn't impact why companies are coming there or not. It's good for real estate investors. But Alberta has a lot of money.
And Alex, I'm sure you've heard the ads because I've heard them a lot lately on the radio, online. Alberta is calling.
Yeah,
They're
that's the
actively
line.
trying to recruit people across Canada, and not just Canada, even California. There's companies specifically set up based on the different immigration and visa rules there to relocate workers into Calgary, but still working remotely then for, say, California companies or people moving from Ontario or across Canada to Alberta as well.
I was so excited when I heard those ads. In that, this again, we've been doing this since 2019. Do you remember Era was the first building that Kyle and I sold, which is closing in January next year. But do you remember doing those transactions, Kyle? And like having the people come in and do those deals in person and everything like that, and just see what we said, see it come full circle. 3 years later, it's really, really cool to see. And this stat, I know this slide excites Kyle a lot. Kyle doesn't like debt. And there's a difference between debt and leverage. Leverage meaning that you're, for example, a mortgage. If I take a mortgage, I buy another property, but I have an income stream attached to it, that's leverage. Debt, I'm just paying interest on. So that's if I buy a new car and I finance it, that's debt. So Alberta has the lowest net financial debt per capita in Canada. Ontario, and it's less than 2,500. Ontario has nearly $20,000, nearly $19,000 of net financial debt per individual. Canada averages just over $10,000 per individual. Alberta is less than $2,500. Why is this relevant? That means you're investing in a province that has the financial resources to attract other companies, other industries to move to Alberta. Okay. And note this was in 2017, this stat from this slide. Statistics Canada doesn't have yearly stuff. But this is cool. This is really, really cool. So well, no, okay, I shouldn't say there's negative reasons why this exists, but Alberta has a $13 billion budget surplus. And they're going to use that money to pay down debt, trust funds. They're investing the money smartly. And that's going to reduce their debt to below $80 billion this year. It's something incredible, and why that is, it's due to the royalties off of the oil and gas prices. But on top of that, they're forecast to have surpluses in 2023, 2024. So they're going to be in the black moving forward. And that budget is based on $70 a barrel of oil, which it's not at 70 right now. So those numbers could be higher. And when I first had this slide, and it shows you like how much this has changed, I talked about the surplus of what this year was going to be, and it was going to be like 500 million. So they were forecasting $500 million surplus. $13 billion is what the Alberta surplus is. Again, that allows them to invest back in to their province and then attract other companies to come in. Why are they attracting other companies to come in? You're probably not going to see extensive oil sands investments. So the oil sands, that investment has happened. So when you actually, I'm going, follow me on this journey, but I think it's important for everyone to understand on this. When companies are looking at, or when people are looking at investing in energy, period. So if I'm a company that invests in energy, what projects can I make a return on? Oil sands, the time frame to get a return on oil sands development is like 10 to 12 years before I see a return on the capital of my investment. The time horizons are just too long for these companies. So you're not really going to see an extensive development of the oil sands, even though the oil price is elevated. That may have happened in the past. It's not going to happen now. You're gonna see them work on efficiently producing from the current oil sands developments they have. They may expand the current oil sand production they have, but you're not going to see a massive influx of capital to develop more and more and more and more in oil sands. When you look at fracking, they much rather invest in fracking because the time frame for payouts in fracking is much shorter. I can get paid out of my capital in 1 to 2 years versus 10 to 12 years. They're just not willing to take those risks anymore. So you're not going to see a massive development into the oil sands. But the great thing is you still have the royalties from the existing oil sands developments that are there. And now you're going to have the government invest and have other companies, other industries move into the area. And that's really, really exciting. And Kyle and I lived this. I mentioned earlier that we're from Sudbury, okay? So Sudbury is a mining-based community. Sudbury used to live and die on the price of nickel. That's no longer the case. Sudbury has diversified its economy away from just being a mining-based community. So we've personally seen a community diversify away from that. Smaller scale. The Calgary, Sudbury's over 100,000 people. Calgary's over 1 million people. But on a smaller scale, we've seen it happen, and they're doing the same thing in Calgary as well. It's just a pro investment province. No rent control, no foreign buyer tax, no land transfer tax, no provincial sales tax, no development charges. And that $10 billion stimulus package, including reducing corporate taxes, that's what happened during COVID. Why can they do that? They have the financial resources to do that. And this is where the rental market, 1% vacancy rate, rental rates up 29% year over year. These are big numbers, and these factor into your decision to investing there. And we've talked about how many people are moving to Calgary. 62.5% growth over the next 2 decades, over 1 million people moving to the Calgary area. You're going to continue to see pressure on those rental rates.
But even with the rental rates up almost 30%, Calgary still ranks 17th in Canada of major cities for affordable rental. So there's still huge appreciation potential there as well.
I can tell everyone on this call, I'm in the process of, I got a new Toronto condo, pre-construction I bought, a Zurich condos at Yonge and Finch. It's going to rent for 1 bedroom, 441 square feet, or maybe it's 460. Anyways, it's small. Good layout. It's going to rent for $2,400 per month. $2,400 for a 1 bedroom up at Young Finch, sub 500 square feet. So there is still tremendous room for growth in the rental rates in Calgary. And we're seeing now the condo market, we're seeing the sales start to pick up. And I saw the same thing happen in Toronto back in 2014, 2015, 2016. People were like, why are you investing in condos? They're a bad investment. Buy houses. But condos become the only affordable option that people have. And they also attract a demographic in that condos are easy to maintain. And the young professional demographic doesn't know how to maintain a house, nor do they want to maintain a house, right? Like, Kyle, do you know stuff about your house?
I do, because I've been forced into it, but I had no desire to.
Yeah, I don't.
When you own a 100-year-old house, yeah, you need to learn a few things.
Yeah, exactly. Yeah. I own 200-year-old homes. They're all shit. But
it has been incredibly stressful, and I do not recommend it.
Kyle, wait. Can you? Okay, no, it's too long of a story. He had a water leak one day, and it turned out to a whole disaster. We won't get into it, but that happens in a house. Guess what? In a condo, I just got on the phone. Hey, hi, property manager, there's an issue. Okay, thanks. Because if I'm investing in condos and if I'm living in a condo, someone else is responsible for what's in the walls, the exterior of the property, and the land. I'm just worried about the square box that I live in, the concrete box or wood box that I live in the sky. And young professionals that value their time and don't want to get bogged down and learn about these things, they don't want to have to deal with the issues that come with living in a house. The amount of times that I've shown people houses and they're like, oh, I hate trees, oh, I hate grass, I don't want to deal with like this kind of stuff when I buy a house. There's a big draw to condo living out there, and it's the most affordable option out there for people to live in. And we're seeing that reflect now in condo sales rising 66% year to date over 2021. Row houses 54% year to date over 2021. It's that smaller affordable market that's seeing the biggest growth now in Calgary. Cal, I'll let you talk about this more.
Yeah, and this is actually a snapshot from October of this year. So looking at September statistics in Calgary, and you can kind of see the trends. Most of the property types are up over 10%. Detached and semis have performed a little bit better, but because of affordability with rising interest rates, towns and condos or apartments that they're listed in this are actually outperforming the semis and the detached properties. And I expect that to continue really for the next 18 to 24 months at least. Because of that affordability, and there was a huge gap that opened up between the low rise and the towns and condos. Whenever that gap gets big, we've seen this in the GTA, it's cyclical. Condos and town prices have to come up because detached and semi prices aren't really going to come down. So you see that narrowing, and then it'll eventually, grow again and then narrow again. But what we're seeing here is, it's been very stable the last couple of months. It's been a bloodbath in many other of the cities, and we'll take a look at that on the next slide. But in Calgary, it's been very, very stable overall. And you actually have listings going down, inventory going down, and that just is going to benefit the real estate market over the long term, because really it's consolidating right now. I don't know if any of you do trading, but you have consolidation, and then it pushes up for another higher high, and that's what we're seeing. But you can take a look at this chart. Might not be able to read it, but what's really important is Calgary has really seen no decrease in price over the last couple of months, whereas other cities, like Toronto, have gone down significantly. It's saying 8%, but I think it's actually much larger than that when you're comparing the peak to the low. But other cities like Halifax, Windsor, Guelph, Kitchener has been one of the hardest hit areas. It's been an absolute bloodbath from the peaks. So, people are always looking at, what did it do? What was their historic performance? But actually looking at, what is the stability there, and what sort of platform am I launching off from? Because when interest rates go back down, and they will, we're heading into a recession, it has to happen. Interest rates are going to come back down. When you're already in a strong market like Calgary is, then that's where you're going to see the huge jumps. We're not going to be looking at 3% appreciation anymore. I'm expecting more like double digits. Obviously, I can't guarantee anything, but that's definitely what I'm expecting when things normalize after this interest rate hike cycle that we're in right now.
And then we talking about what we do a lot of work with Truman. All the projects have sold out that we've launched. So Frontier, Lockwood, Cavello, Aberdeen, Mondrian, Gallery, Rangeview, Pine Creek, Harlow, all these projects have sold out. And what we currently have right now, and I'll let you talk about these.
Yeah, this is the Arthur. So it's already been a very successful project. It did launch a little bit earlier in September, but it's 2 buildings, over 200 units. So it's taken a little bit longer for all of the units to be absorbed. Whereas for like Gallery, that was right downtown, sold out in 11 days, much smaller building.
Only 120 units.
Yeah. But Arthur is the lowest investment point for a Truman project. So you're looking 2 bedrooms for the mid 300s, including parking. Let that sit in. Where can you buy any unit, even in Canada, for 300,000, let alone a 2-bedroom with parking included? Right? That affordability is.
And no closing costs.
Yeah, and virtually no closing costs. Only 10% down. So you're putting 10% down now with the developer to secure the unit. It's closing in 2027. So you're sitting on it for 5 years. You only have, say, $36,000 invested, but you're getting appreciation on that full purchase price. So even a 3% return, you're significantly amplifying your returns because you've only got a very small deposit down. And it comes with a 2-year rental guarantee as well to sweeten the pot even more. So if you're looking for a complete investment package, Arthur is really it. But what gets me even more excited is that it's only 10 minutes away from the Amazon Cloud Computing Hub that's going to be in North Calgary. So you've got a huge employment center, not to mention that it's already close to the airport. So you're 10 minutes away, you're not in a flight path, anything like that, but you have huge trade, economy around the building today. But Arthur Condos and Cityscape, where it's located, that's the neighborhood, it didn't even exist 10 years ago. So that's how rapid this area is developing. So actually looking to double the population in the next 10 years. So going to be growing very, very quickly. But it's nice because it's part of a new master plan community, and Truman is taking a huge lead in that area. But what's nice is part of a 115-acre environmental reserve that's included there as well. So they're not just bulldozing everything. They're integrating the community into the natural environment as well. But you're going to have new schools there. You're just minutes away from shopping. You're 20 minutes door to door downtown. Where can you get in 20 minutes in Toronto, Vancouver? I can't even get to the highway in 20 minutes, let alone anywhere else, right? So pricing from about $465 a square foot, that is Toronto pricing over a decade ago. You just can't get those numbers anymore. And again, it's the most affordable Truman project available right now. Truman's the king of Calgary, building the most units in Calgary by far of any builder, but very high quality, very reputable builder. But everyone's out for cash flow. You're looking at that, you're comparing today's interest rates. What's it going to look like? Well, I took a look at the rental guarantees on the units, and they're probably below rental rates today in the area, let alone 5 years from now. So knowing that rental rates are up almost 30% in Calgary year over year, they were up almost 5% month over month between July and August. So if you're just applying 5% growth for the next 5 years, you're getting significant rent, over $2,000 a month for these 2-bedroom units or 3-bedroom units. So even at, say, 4% interest, you're still going to be cash flowing on these properties. And that's what a lot of people forget is, the rents aren't going to stay stationary. They're going to continue to grow. So when you're doing your investment analysis, keep that in mind, because I've missed out on many investment opportunities before in the past by being too conservative on these. And obviously, it's important, but apply some basic appreciation to rental and prices every single year when you do your analysis.
And there's no rent control, so
absolutely,
you don't have to. So you may, if you end up in a soft year or soft month when you have to rent it out, not a big deal, because what you'll do is in 1 year you're going to jack the rents. we've done it in Toronto, in that certain buildings are rent exempt depending on when they're built. So the different rental strategies you can take and everything like that. But the fact that you have no rent control out there is massive for you. We're just talking about rental rates. So we're looking at the projected rents in 2027. Again, I just mentioned I'm renting a 1-bedroom at Yonge and Finch, sub 500 square feet for $2,400 today. Look at these rents, these 2-bedroom rents with parking, and that's no parking. Look, if I get into the 3 bedrooms, it's only the 3-bedroom that's more than my 1-bedroom. So you have still tremendous room for growth and affordability still in Calgary. And this is the latest launch, Plaza. Cal will talk to me about that.
And Plaza is a really exciting development. This is your more premium high-end building. It's definitely going to be a landmark in the West District community, but this is where it's got the most ludicrous incentive package that I've ever seen. And I'll talk about that a little bit more. Units here are a little bit more expensive because it is a slightly better area than Arthur, but it's also a much higher finished product as well. Going to be more designer, definitely higher end, which is going to attract a higher profile tenant and a higher buyer as well. So typically making a little bit more money, higher social economic status. But again, these are only to require 10% down right now and also closing in 2027. So you've got that maximum leverage effect. And these are coming with the most ridiculous rental guarantees that I've seen by a Truman product as well. So actually the highest cash flow, and I'll talk about that in the next slide as well. So Alex, if you can go to the next one. Now, this guarantee is the best that I've really seen of any project. And it's only for the first 50 buyers. And this is almost running out now. The project has not even launched officially yet. Officially, it goes Friday, but we've got pre-sales access to units and to this special promotion package. So if you're interested in Plaza, get in touch with me right after the webinar because this isn't going to last. But they're throwing in everything, including the kitchen sink, literally. Underground parking, storage, huge $20,000 upgrades of units, paying your condo fees for 2 years. Plus you're getting a rental guarantee as well at 6% of the pre-GST purchase price, and property management included for 2 years as well. And then a bunch of extra benefits, but also free assignment. In case life happens, you need to exit your purchase agreement before closing, you're able to do that. Don't recommend it, but it's there and it's available for you as well. So about $100,000 worth of incentives for you to buy in Plaza right now. And then the next slide, Alex, the highest cash flow of any Truman condo that I've seen. And it's a lot because of the condo fees are being paid, but also the amazing rents that this building is going to command. And Truman is so confident in it that the rental guarantees they're offering are crazy. For some of the larger units, it's over $3,000 a month that you are guaranteed for 24 months from closing with no vacancy, because Truman is going to lease the unit back from you and then rent it out to an actual tenant. Like, that's how confident they are that they're going to be able to find tenants and at those rental rates as well. But this is also going to become a destination area. West District is the master plan community. And it's about 95 acres. And Truman is really developing it. Alex, do you know how long the time period is for this development?
10, let's call it 10 years.
Yeah, 10 years, and they've already got developments there, like Gateway.
Yeah, it's not you're not the first person buying dirt there. They already have existing buildings that are already complete in the area. So I would say that they're probably about 40% along the way. I got to go back and look. I think they announced this whole redevelopment in 2017 is when they were looking at doing it. Yeah, and there's grocery that's coming. There's retail.
Over 250 shops that are going to be integrated into it. So it's really going to be your mixed use, live, work, shop community. And that's going to set it apart from many different areas of Calgary and just any other cities. Like, it's not many communities aren't built like this or to this scale. So it's actually going to have a new business innovation hub built into it, 1 million square feet of commercial, but you're still only 15 minutes to downtown, 15 minutes to the Foothills Hospital, University of Calgary as well. It's all accessible. So the people that are going to be living, you have amazing accessibility, highways very close as well to get around, and you're only about an hour away from the mountains as well. So Banff becomes, an easy drive for you if you want to go out for the weekend. It's also ideal for Airbnb. Like Alex said, very low regulations, very business friendly. So it's not locked down like Toronto is, you know, it's kind of freely accessible, and they definitely promote Airbnb and even have turnkey Airbnb providers as well, if you wanted to consider that in 2027.
Yeah, and because it is in the west, the west is naturally more expensive in Calgary than the east, and it's due to that direct proximity or that close proximity to Banff. Like literally here, if you live here, then you get on the highway and you're nothing stopping you to get to the Rocky Mountains. And that's us.
Yeah, thank you everyone so much for attending tonight. Really appreciate you taking your time on an evening.